Go.
Hello, everyone. Welcome to Radical Co-Founder Candour. Last week we talked about our backgrounds and how we met. This week I thought we'd talk a bit more about sort of our why, our values, and more importantly, why investment is not for us. So, Tom, I know you have very strong thoughts and feelings on this topic.
Yeah, I mean, well, we could start just by talking about like what investment actually means, and if we're clear on this, it's actually equity. This concept of equity and selling equity, and equity is a great idea for other people because what they do is they get to buy a piece of your success and ride the tailcoats to the moon. Right, that's the point of investment. You buy stocks on the stock market in the hope that they will go up because the company does better. And yes, our feeling is that we, the three of us at the moment and growing, are the company. And there is no exit plan where we necessarily just cash out and get that equity out. And that's what I think was really eye-opening from the start. When we talked about this, we said, well, who's going to get what equity? And we said, well, we'll just make it equal to keep it fair between the three of us.
I mean, it wasn't that quick a discussion, right? There was some debate. I was a firm believer in the band metaphor, right? How many successful bands broke up after 3 years because the lead singer was earning slightly more money?
Yeah, and it's understanding really what we were trying to do. Yeah, so the parity is great in equity because it gives a long-term thought process to it. So the idea that everyone's equal in the longer term gives everyone an incentive to work together for the same goal. I think as soon as you start giving away equity to less than fully invested people, so we talk a lot about smart money and silent investors, people that give money and then don't say anything can be good, right? Money is great and they don't have any input. That's ideal. I think losing control or having people that aren't aligned with you completely, you can't get rid of them if they're investors. You can't, if they've got equity, there's no, okay, that's enough, thanks, goodbye. So
that's buy them out, I suppose.
Yeah, it's probably like more than a marriage, right?
Yeah, it's big, and buying out again requires a lot of effort, and it's even worse if you're upset that somebody's got 5% of your company, and then to get rid of them, you have to give them 3 years of your life's worth of cash. Like that's not going to sit better. So this was the kind of thought process we were going through, and when we looked at equity, and this is also comes down to people we work with, so people on our team, and the idea of do they get equity? And I thought it was a great idea. We'll give everyone bits of equity and do the whole.
For a bit of background, it's very Silicon Valley, isn't it?
Yeah.
Like, there's all these competing firms going through various stages. There's literally like a Y Combinator blueprint you can print off. Another round. Evaluations keep going higher and higher, and if you get in early enough, then your ticket is worth loads, and it keeps expanding and expanding. So, and we work for a few British companies that are trying to sort of copy that system and offer potential equity, right?
Yeah, and it reminds me of the anecdotes of like the guy that painted the Facebook office got paid in shares, and now he's worth like hundreds of millions, And I think that with that, it's a lie, because what it does is it traps people in this golden cage. There's a lot of the stories of I'll give you 1% equity and pay you nothing, and then maybe in 10 years, if you work like a dog for a while, then you may cash out, right? It's like a weird form of like indentured service. Like it's odd. And I think if we don't want to lie to people up front and say like this might happen, which is the worst thing you can do. If you have a full intention to IPO and you're like, yes, then you're not lying. You are giving people the best option. But if our intention isn't to do that, it would be a lie to say it.
And I think it's even worse because people see this like massive successes examples from like Silicon Valley, and they have really high expectations when they have the same program within their organization, and then they realize like, oh, like these shares will be never worth anything.
And you want to put pressure on people in your team, like, cool, so you were planning on buying a house or having a family. Well, you can't do that if the company doesn't do well, so you can't get paid what you're worth. No, future you may benefit. It's an incredibly stressful way to do it.
It's been funny because I've been watching Coffeezilla, a YouTube channel who talks to all these scam artists and MLM pyramid schemes, and it just reminded me so much of like the corporate recruitment speak of like promising the world to these people, and as long as this pyramid gets big enough, everyone will be super rich. It's kind of the hope and dream that you sell.
Yeah. And again, the scary part is that like with the scams, like, it's a scam. But like here you have examples when like the super successful companies, the people actually made a lot of money.
Well, the best scams have the stories of the people that come on stage and be like, I sold this, and this worked for this company and made millions. Everyone has those examples.
To the moon, right? Lambo to the moon.
Yes. So it's a different way of thinking about it. So from the start, it was understanding equity, and this was a journey for all of us. Like for me, it was quite going from learning about startups and equity and being like, oh yeah, cool, we'll do vesting to keep people interested. We'll do this vesting model where we can only cash out after this many years. And
can you clarify vesting for people not familiar?
Yeah, with it? it's the idea of you get it's like delayed shares, right? So vesting is this idea where you can't run away with all your shares year one or year two. You get the shares over time, so you're incentivized to keep working for the company to vest, to actually vesting is getting them out. So it's like a simple way of looking at it. But yeah, it's a big deal if you're looking to climb up the pyramid, right? If you want to make sure that your percentage when you get the investment, the 100 million, for example, and you get that number in, all of the previous shareholders then get to cash out effectively, and it grows like that. And at some point, someone's left holding the bag, which may be a giant conglomerate or a bigger company or a hedge fund, where they're able to strip the assets or just earn that regular percentage. It's a small enough part of their giant portfolio where it doesn't matter. Yeah, and that's the model.
Yeah, and I think now after a couple of years, I think you cannot really motivate. I don't believe in motivating people, like giving them more shares, or if you're not motivated, it's very difficult to motivate somebody. That's what I really think. Like you can do a pep talk and somebody will be pumped for a few hours or a few days. But at the end of the day, I think some people just act, they motivated and they do stuff, and other people, it doesn't matter how you encourage them.
Yeah, and I think a lot of it is painting by numbers, just copying what Silicon Valley do. So as I say, it makes sense there where you've got a very small place, very competitive, competing for the best developers, right? And they can move across and they can get paid. I suppose once you're on $200,000, there's only so much more a $50,000 raise is going to inspire you, right? But shares in a next big ticket might be the thing that pulls you over. That's all fine and good. That's a game I don't really understand or can't speak as an expert on. But what I've noticed is loads of English companies copying that. And I'm like, okay, but there's a few problems here. One is that you don't have a bunch of massive VCs strolling around the ecosystem offering money left, right, and center. So the exit is pretty hypothetical for a lot of these companies promising massive buyouts and exits at some point. And more likely someone's going to leave after 3 years and all the equity they had immediately disappears because there's a clause in the contract that says, oh, you only get that if you work with us for 8 years when we might sell, but we don't have to.
Yeah. Or if we fire you just before we IPO, then you lose everything anyway. There's lots of ways to look at it. But I think it's it was something that we were aware of from the start, is that we didn't want that. And also we were never it was funny, on one of the job specs I put, I was like, we will not be the next Google. And someone replied like, I'm really interested to hear about you being the next Google. I was like, well, you didn't read it very well, did you? Like, we will not be the next billion-dollar company.
I mean, part of that's our limitation, right? So many of these companies get so big because the market cap is 9 billion people. Everyone wants a Facebook, right? Everyone can either get in the back of an Uber or drive one. But we have a very clear market cap. There is this many 100,000 Atlassian customers, right? And we have the potential to sell to 50% of them if we're lucky. That's it. That's your lot. Now that'll grow over time, but we can't go to some investor and say 11x for starters, and then after that, Lambo crypto to the moon, baby. There's just a ceiling on the thing.
Yeah.
Which means we've set our ambitions accordingly, And it's just not a place that's hot with money, really. Like there are the exceptions. It's starting to mature.
Hot is how you define it. It's about redefining success and also redefining what is hot with money. Like those markets with billions throwing around are incredibly cutthroat and incredibly challenging to get started, right? If there are billion-dollar iPhone apps, but they're quite hard to make and to break through, right? So just because something is possible doesn't mean it can be done. So redefining success and saying like, here's what we actually want to achieve. And if anyone looks at us and says like, that's not what I would define success, they're likely to fail and they'll never achieve what they want. So they need to redefine what makes them happy, or they'll always be unhappy.
Just before we seem too cynical, Jacek, you actually worked for a real company that did real equity, right?
Yep. And that's why I'm saying like that's the danger, because like some companies actually do it. And yeah, like I know people that got really wealthy with shares. Yeah, I think I shared with you guys like my ex-CEO just bought a house which was like $32 million. So yes, it can work. It can work in some cases.
Pyramids do exist, but there are more pyramid schemes than pyramids in the world.
I think you described it really well just then, Chris, about it's the market cap. It's the market cap is what the limiting factor is. So we could give people equity and they'd be like, oh, cool. So when you're worth 20 billion, this will be worth how many hundreds of millions? We're like, you're going to be disappointed. Like the problem is, like you just said, Chris, when you're earning 200K and you get a little bonus, what difference does that make? But actually for the company we're trying to build, if everyone can actually earn their value the whole way through, profitable from day one, is another key thing, is that we actually make money from what we sell today. We're not future profitable like Uber, for example. So we can pay people what they're worth today, and they can be paid proportionally as we grow. So why can't the salaries of the people that we work with increase as we grow?
Yeah, and that's a big difference, because so many of those huge companies, they actually don't make any profit, right? They're running on loss for years and years and years.
Yeah.
All right, gents. I don't know whether that was inspiring or depressing, depends on what you were hoping for. But it was real, it was radical,
it was honest.
It was honest. Thank you very much for that.
Thank you.
Right.
Bye-bye.
Cheers. Bye.
See you next week, guys.